I'm going to call to the stage our crystal ball panel. Mark Ramsey, the president of Macquarie, Mexico. Alberto Ramos, the director of CFE in Mexico. Fuensanta Diaz, the managing director of West LB. And Michael Olivier, the president of Future Pipe Industries in the United States. Focusing on the near future. How do you all see things improving from, let's say, 3 months ago? And you know what I guess the admonition I gave to the panel is I'd appreciate it if we wouldn't sugarcoat it, because you really can't sugarcoat anything in infrastructure. There's either financing or there's not. What do you see happening in the next couple of months in terms of improvements, and what do you see happening over the next year? And if we could start with our friend from Macquarie.
Thank you. Thanks very much for the question, and thanks for inviting us to be here. I think that this last 12 months has been particularly interesting because, in spite of the fact that the debt markets have really cratered and then started to come back a little, projects still have been done. I think we've done 23 projects in the United States in the last 12 months. So done, meaning completed, and they're now underway, financed. What I would say is that in the last 3 months we begin to see the return of equity to projects. So equity seems to be a little bit more available than it was 6 months or 9 months ago. But the price of that equity is changing, or has changed from 12 months ago. Debt is still extremely tight. It's very difficult to get financing for projects, and that difficulty I think is probably exacerbated by the fact that there's an expectation, because of all the government money that's allegedly coming into these programs, that the governments have assumed that we can do private-public partnerships and finance them with bank debt, and that may not be realistic. And just to give a short example, I was just listening to the previous presentations, and one of the chaps the guy from Seattle talked about this Eastlink program that they've got going, which sounds like a great program, but as I just did the numbers on a piece of paper, it was a $3.8 billion project. They have 45,000 passengers per day. So that capital cost per passenger day is $8,400. If you assume 200 working days a year and 400 trips, therefore, on this thing a year, and amortise it over 20 years, the capital cost comes out at, per trip, $10.55. If you assume just 1% operating cost, it comes out at $2.10 per trip, and if you assume a cost of capital of 10%, that's $21 per trip. So you're coming out with $33.65 per trip. Now, I don't know how these things, and it's just back of the envelope, clearly I might be wrong by 25%, but even so, this is a very expensive trip. Somebody's subsidising that. What I think we face in the last 3 months is a surge of interest in governments providing infrastructure, and particularly in mass transit, without perhaps as realistic an understanding of how little the private sector can do if those are the sorts of numbers we're talking about. You know, there are going to have to be very big government subsidies. Private sector, not the debt markets, not the equity markets, simply won't be able to provide the money to make a profit on those sorts of schemes. But overall, the future is looking a lot better than it was 3 months ago. Equity's there, debt's starting to come back. It's still tight, it's still expensive, and the terms are nothing like they used to be 3 years ago.